Hello fellow investors, this is the 20th and the last restaurant stock I'm screening. The stock is Wendy's, WEN, WEN, a major fast food chain of restaurant like a McDonald's. WEN is currently trading at $18.86 with market cap of 4.04 billion and PE ratio of 21.37. It gives out an annual dividend of $0.5 per share, a yield of 2.65% of the current price. It's now 36% of the highs. First metric, we want an EPS multiple lower than 3. It's 24.28 because the EPS is too low. Now we want to know if the PE is just too high. EPS is increasing, good. OSN or number of shares outstanding is decreasing, good. But look, 2 million shares in 5 years. That's pretty low if you ask me. Second metric, we want to pay $1 or less for 1% of the money they're making, meaning we want to pay 1 PE or less for 1% of their margins. This is based on the lowest margin of the current year, or the previous year, the trailing 12 months, and the 5 and the 10-year average margins. I use 10.18 here, not the 10-year margins, because I think this is just too low to use. Again, it all depends on your assumptions. Sometimes I'm just being logical when it comes to picking the lowest margin. Ultimately, it has to be on the lowest side. Anyway, I used a 40% margin of safety here because I think the revenues may have capped. Look at their revenue growth, negative 20% growth in 10 years. It's currently trading at 2.1 times their margins. If you're okay paying for when this stock with that multiple, buy the stock. But in this metric or process, this is easily overvalued. Third metric, we want to pay a lesser PE than price to free cash flow. I want the price to free cash flow below 20. If it's above 20, I'm not buying the stock for this particular metric. It's 20.1. Around my threshold, but I'm still not comfortable buying at these prices. 1.06 times PE to price to free cash flow. Fourth metric is designed for stocks paying dividends. This is basically the free cash flow margin once dividends are discounted. Ultimately, you want to buy at a lower PE than the left free cash flow margin. Although, it shouldn't matter in the long run. This metric could tell you the company's future prospects though, regarding dividend increment and share buyback program and debt issuance. Most companies or stocks with very high payout ratio almost always equate to stocks having high debt levels. If not, they're issuing back shares. Fifth metric is historical PEs. We want to know our discount compared to when the markets have valued the stock before. I have here two historical PEs, one from Guru Focus and the other from Macro Trends. You can see here the highs, the lows, and the average PEs the stock has traded before, but we'll use the lowest average historical PEs to base our assumptions. 0.81 times historical PE. It means when it's trading at a lower PE now, at a discount. Here are some useful metrics I use. PB ratio is high for my liking, 8.9. I want this below 5. Current ratio is high though, 2.65. We want this at above 1. They have strong cash, at least for this quarter, considerable debt levels. To conclude, here is the valuation summary for WEN. WEN is overvalued, trading at 24.28 times EPS multiple, 2.1 times margins, and 1.06 times PE to price to free cash flow. I don't own the stock. I don't think you should pay premium for the stock. I'd recommend you to sell, but don't short though. Just avoid the stock or avoid buying the stock. I have a fair value of $9. Intrinsic value of $11.69. This is from Guru Focus. So I'd say around my fair values. I could be a buyer of the stock at a high price of $10.56. So this is like a Guru Focus intrinsic value price. Guru Focus is kind of agreeing with my process here for WEN stock. Let's look at their charts. 3% yield is 16.67 dividend yield. 4% dividend yield is $12.5. My high entry price for the stock is $10.56. 5% dividend yield is $10. So I think of a buyer of WEN at $10, just considering my dividend yield and my highest entry price of $10.56. So yeah, for Wendy's, I'd buy anything below $10. Yeah, that's my take on Wendy's stock. If I helped you in any way, shape, or form, maybe consider subscribing, liking, and commenting down your thoughts below. And yeah, see you on my next video.